Good morning, YouTube. Today is Tuesday, January 9th, and our Pittsburgh Steelers are in the playoffs. How you doing, boys?
You're doing well on mute.
You're muted, old guy.
Yeah.
We'll start with Tom.
You're looking good, Ant, with all your gear on. I'll tell you that.
Yeah, man.
Thanks, man.
Guy went to the LaPera store again. More gear today. The other day we had different hats, different hoodies. Now we got T-shirts and other hats. Holy cow. What's going on over there?
Getting it started, man. Beginning of the year.
It looks
Gotta
good.
get some stuff to pass out to the people.
That's cool. That's cool. Looking sharp. Sharp.
Let the people know.
West Penn Financial.
But guys, before we get into it, are the Steelers going to do anything? Are we going down against the Bills? I think we're going to beat the Bills.
No, we're going to beat the Bills. Let's do this.
Okay.
Yeah, I'm still riding my Super Bowl bet from beginning of July, so we're good all the way.
Let's go. Mason Rudolph. Rudolph the red-nosed reindeer. Let's go.
It just took Tomlin, 75% of the year to figure out what's going on with his team. So we're good.
No comment.
Mm-hmm.
So far this week with interest rates, we've been very slow, very steady. Nothing real big news has come out. Core inflation comes out later this week. But as of right now, interest rates, we had a positive blip there in December, and it's kind of the problem when you hear interest rate news because they move so much. Sometimes you hear news that is a couple weeks old, and everyone's like, "Oh, rates are coming down." But Ant, if you can pull up our candlestick chart, and we can show everyone on the left-hand side the big green bar right there on December 13th. Get over here. That was, this was the day the Fed made their call, their decision that they said that they were going to potentially lower rates in 2024. As you can see, after that news, we were very, very steady. We went up a little bit, but as you can see, since about the new year, we have been a few days not too positive, where we're now actually worse than when we were on the day that the Fed made their announcement. So what I'm trying to get everyone to understand here is just because the Fed made an announcement, 3 weeks ago, a month ago, it doesn't mean the rates stay where they were that day. And again, the market's moving every day, and we're starting to have a couple negative days in a row. So we need to see rates bounce back here this week. But I just wanted to kind of show everyone every candlestick there is a single day. Every day, and again, that's just a trading day. It's not showing weekends. It's not showing holidays. And every day it's showing you how much the rates are moving, good or bad or not at all. And we've just kind of had let's say a week to 10 days of trading days that haven't been great. So we need to see a little bounce back here. Nothing crazy, right, Anth? We're still in the middle sixes, I would say, for most rates. But, we're still having buyers close to that 7% range too. So we are going to continue to show everyone the candlestick charts as we continue through 2024 so we can show where rates are. And if we even want to slide out a little bit, if I pull out to the last quarter and I show you back in October, the bottom of this chart, this is the lower on the chart we see, the worse rates are. So as you can see how much better even we've climbed out of the hole since October. It's still a positive trend. This quarter has been great for rates. But when we narrow it down into more of a macro level, we can see what's going on a day-to-day basis. So AM Chatter's here for your interest rate info throughout the year. And we're going to continue with our candlestick chart. So, Anthony, you can take that away. Do you guys have anything to add?
No, I think, I wouldn't be over concerned we see in the rates go down this first week. That is kind of normal to what we see in the beginning of each year. So, still get out there. It's still a good time to buy and get your buyers, agents. It's a good time to still get your buyers out there because the rates are lower. And we can only help them more if they keep going lower. So keep an eye on that. I do think, a little bit of a bad start to the year. It's not really too bad, but I think it will continue to get better here through the next few weeks.
Yeah, it's crazy how I'll see a report. It's like interest rates dropped the most in a decade today. And then I'll go check it out and rates were negative on the
Yeah,
day.
I'm like so jacked off because I'm like, oh yeah, we get a couple locks in here and figured out. No,
Yeah, and then you look at it oh, that's old data. So just take those news reports with a grain of salt. If you need to know where rates are, always reach out to us any day, right, Anth?
Yeah, definitely. I mean, clients should always reach out to their loan officer, regarding mortgage rates. I mean, they change multiple times a day. So it's not like whatever we quote this morning is going to be the same this afternoon. The rates do change multiple times a day, but the biggest thing is making sure you're getting an estimate too, because there's multiple ways you can get a lower rate, but make sure you understand the cost associated if you're doing buy downs or something like that. But overall, the rates are great rates compared to November. It's still a great time to buy. I mean, I know we've been talking about that for forever, but the rates are a lot lower than they were in November at, October, November at 8%. So I think we're going to see a good season.
For sure. But before we get into that selling season and the pre-approval season, a lot of things can change, especially if you were pre-approved back in October or November. One thing that can change is the interest rate. That could be a good thing. That could be positive. Rates might drop. But a negative that might have happened from when you got pre-approved originally to now is student loans. For years, student loans were in deferment. No one was paying any federal student loans. And I mean, that could hurt. That could help pre-approval depending on the type of loan. Now the mortgage guidelines are changing because those government student loans are out of deferment. We have to count a payment, and that payment is not the same for every loan type. It's not the same for every type of loan. Fannie Mae and Freddie Mac can have different guidelines on this. So pretty much a loan officer is needed to figure out what your student loan payment is going to be if you have one. It can be 0.5% of the balance. It could be 1% of the balance. It could be $1 if just $1 is showing. The differential of what you can charge with student loans or what we have to count for student loans can be a very, very, very big difference in everything. So I just want buyers to be aware that if you have student loans, don't close your eyes and pretend they're not there. You have to pay them. It is a loan. We don't want you guys to get lates on student loans, and then that drops your credit score. Now you don't qualify for any home. So if you have student loans, make sure you pay them. Get on an income-based plan if you have to. But just be aware that in a lot of cases, we're using 0.5% of the balance if there is no payment showing. That's kind of been the standard, but there are cases you have to use 1% of the balance. And a lot of buyers don't even know their full balance because there are multiple loans broken up in different years, and they're not even sure of the full balance. Again, another reason you have to get pre-approved, because with the change in student loans can change your debt to income ratio and what we qualify you for.
No, yeah. And that's a good message to get out. And even the agents talking to their buyers or family members, anybody, let them know those student loans are kicking in. I see time and time again with lates for younger adults that just got out of college, lates on their student loans. They didn't know they even kicked in. So know that that is going to happen within the first 6 months to a year and take care of it.
Yeah, because guys, any recent late on a credit report is going to hurt you. It's really going to hurt you. It's going to drop your score, where then you do put your whole dream of buying a home in jeopardy. And again, we don't want to have to update you and say, hey, your score just dropped, 75 to 100 points because you have a late from last month. That's definitely what we don't want. So student loans are going to become a bigger factor in 2024. Hopefully they get figured out, because we had such a wide variety the last couple of years of, are they being paid? Are they not being paid? Are they private? Are they government? So hopefully when it comes to buyers with student loans, we can make it a little bit easier on them with their qualification in 24. But other than that, we will head on to Friday. We will prepare for episode 100, and I will see you guys then.
So you got